to the stock market morning prep video for Friday, July 25th. Markets took a little bit of a breather. To be expected, dog days of summer trading here. Dow Jones down $2.83, Nasdaq down $1.59, S&P up 97 cents, and a Russell down $1.85. And this is what I usually continue to talk about, especially in the summer months. It's very, very quiet out there, and I basically sound like a broken record, but there's not much to do. You can't sugarcoat things, but you can be very selective in your trading. You can look for ideas. One of the ideas that I do like is energy. I still continue to follow energy. A little bit stretched, some of the energy names, but you get a couple of names with some good catalyst behind it. You will be rewarded. But yes, it is very quiet out there, extremely quiet, and just the near-term future of the U.S. markets right now, it's just you can flip a coin. You really just don't know because of the fact that we're making new highs every day, just about, on anemic volume. We have divergence in the Russell 2000. Bonds continue to get bid up. Now, just yesterday we did break down on the Japanese yen, which I'm going to show that to you on the chart. So, just a very, very mixed bag, and the markets right now are just not giving us any signs. I mean, I think, and then I mentioned earlier in the video, that I think the markets are so close to tagging that 1996, 2000. Why not? I mean, I would rather see it hit that 2000 milestone mark and then reevaluate. I do think the risk is greater to the downside than the upside. So that's something that we really need to deal with and be very careful. And again, don't mean to repeat myself, but you should not be looking to add positions at these areas, at least not now. Let's wait for a little bit of a pullback. And I mentioned before, we haven't had a 10% correction over 3 years. Not healthy. We haven't had a 5% correction in months, and I think it was the first quarter. So just keep that in mind. I got a couple emails, and they talked about builders and what do you think, and we had some housing data come out yesterday. If you're day trading, really doesn't mean too much, but if you're looking to build a position into the builders, now is not the right time. You need to see a washout in lumber prices, and as you can see here, we did get a little bit of a push lower in lumber, but what happened is price did not break down with the lumber prices in the ITG. This is the home construction ETF. So what we need to see really is price really start to break down and follow lumber prices, and then lumber prices need to really break back to the upside like this. When you see lumber prices leading the builders and the home construction, that's when you want to look to start buying. Okay. Yes, it is a little bit volatile, but I'd be buying any weakness once lumber prices breaks back above price action. Okay. I hope that helps. Let's go right into the indexes here. Again, not much to talk about. However, what is a sign, a good sign, a good bullish sign, is we're breaking down in the Japanese yen. Now we broke back down of this ascending triangle, and now we are breaking below the Fibonacci cluster of resistance, which was support. So it just continues, breaks back up, breaks back down again. So, but it's still pretty much bid up here. But yesterday we broke down, and we're following suit this morning, early this morning. So let's take a look at the bonds, and as you can see, bonds are still well bid up at the 1272 extension. My longer term target is the 140.26, which is the 1618. Okay, and this is again a big red flag for me. Bonds are, I believe, in a short squeeze, but when markets are making all new time highs, and you have stocks above the 50-day moving average breaking down, not really following, you notice that then you'll have selective few stocks within that sector, okay, are making new highs, and it's just to me, the markets just do not feel right. If we're making new all-time highs, a lot of the indicators and sectors should be coinciding nicely, but you don't have that, and then you have bonds continually well bid up here. To me, that's a big problem. Now, it's all about timing, right? We really don't know. Market just can grind higher the rest of the year, but until the markets realign itself, I'm just going to continue to use caution and be very selective in my trading. The ES, okay? The ES 1996 would be the first target, 1996 to 2000. If it gets there, I would suspect that it'll overshoot, usually does, and then roll back into the channel here. So we do have a big channel As you can see, we've just been grinding higher. And again, you can count how many days that we're down. That's not really good. There are analysts and the pundits and the talking heads on CNBC and we don't need to. I heard one guy say that we don't need to correct anymore. It's just absolutely insane. But I don't even know where they get these people. But anyway, yeah, we could use a little bit of a correction. I'd like to see, the 200's right down here. Yeah, bullish symmetry. The trend is strong. Regardless of volume, the trend, everything continuously bid up. So you don't want to be fighting it. I wouldn't be looking to short the market. I'd be looking to buy pullbacks, stocks that have based, and now coming out of a base. That would be really your best bet in this type of market. Diamonds here just kind of chugging along with the other four indices. And we have the transportation sector. I mentioned we're going to tag this. We did, and we rolled back down again. So remember, we have repetitive patterns here. Every time the market made new highs, we sold off. We had a new high, we sold off. We had a new high, we sold off. And I mean interim high. I don't mean all-time high. But as you can see, we did the same thing here, here, here. We tagged the line, and then we just tagged it. We went down again. So now we're tagging again. So I do think that we'll probably break back down again. Okay. And again, I do think this key pivotal low will be retested at one point, and then if that breaks, then of course a lower trend line will be in play. But again, that's a little bit far away. We do have the bullish symmetry in the 8 to 20. The 34, the 50, and of course the 200 way down below. Okay, but it does look, for now, markets just continue to grind higher. There's absolutely nothing going on with the transports. I do think that totally, as well as the whole market, is unsustainable. Everything reverts back to the mean. Just keep that in mind. When? That's the problem. We don't know, but everything reverts back to the mean. And if it's bonds that are telling us something, and then of course the Russell 2000, which you see in front of you, that is yet to be seen, but I don't like the fact that the Russell was weak all day yesterday while we continue to grind higher and make new highs. Again, we do understand that the first quarter, we were very weak, and then all of a sudden Russell played catch up. Can this happen again? Sure, but let's see. We want to really be patient here. If you are trading the Russell, we do have a couple of reversal candles here. We did not trigger, because 114, let's call it 114.20 needs to close below, and then I think we would at least test this, and then probably the 200, and then we would reevaluate. But this is not a real good sign. So you have some market divergence. We do know that, but that doesn't mean that we're going to go out and sell the market, right? We want to see the Russell, but pay attention to that Russell and pay attention to the bonds, and of course the other sectors that we just talked about as a whole, and you'll get a good dynamic of really what's going on under the hood. I like to see that intraday. I have it all on my charts because it is important to see what the other indices are doing. And lastly is the Qs. Apple, of course, compliments of Apple, pushing the Qs yet to another all-time high. And as you can see here, it's just crazy. I mean, we're literally 2.5 months into the summer, and we've literally maybe a handful of days down, and if we can continue to do so. But it's not, to me, if the markets continue to grind higher and we continue to make all-time highs, no volume, no support with other indicators and indices that we're starting to roll over. Remember, this morning we had German data came out, was worse than expected. You had Amazon coming out with widening losses, and it got crushed in the after hours. So you really have to be careful. I mean, I don't think that this is such a great earnings season. So just use a little caution. Take a step back. Again, when in doubt, cash is a position. Definitely use your stops and be very selective in your trading. Remember, because you see the numbers going back and forth, flashing in front of you, if you're not doing anything, is a reason, because you haven't found the right setup, you haven't found the stock, of course, and you haven't found the pattern. So, be cognizant about things that are around you. It will come. I do think that there is some great opportunity that's going to be coming into the marketplace in the next several weeks. So we just got to be a little patient during the dog days of summer. Have a great weekend. Enjoy the weekend, and we'll be back with a full report on Monday morning. Take care, everybody.